Coming up on the program, Tanzania waives import duty on machines for processing leather. Nigerian Content Development and Monitoring Board commits $332 million to Commercial Ventures Program. Kenya uses simulator to train pilots. Thank you so much for joining us on Business Incorporated today. I'm Ini John Mekwa. First, intraday market numbers. Sentiments were mixed on the African continent, with South Africa's JSA index recording the highest gain at intraday at 66,519.86. That's a 0.62% increase on its all-share index. Nigeria's all-share index was also positive at intraday, adding 0.12%. For 8 sessions now, trading has ended bearish on the floor of the NGX. Now, on the flip side, Egypt's EGX 30 lost almost 1% at intraday, while Kenya's share index closed negative on Wednesday, losing more than 1%. And similarly, in the Middle East, investor sentiments were not so different, as most markets we track were mixed. In the UAE, Dubai's index was negative and had lost 0.31% at intraday, while Abu Dhabi shared 0.25%. The positives were Qatar gaining 1.28%, while Saudi Arabia was up 0.25%. European stocks were flat on Thursday morning ahead of key U.S. labor market data expected to hint at the state of the U.S. economy. Conrad joins us from Frankfurt to give us more from the region. Hello, Conrad. Good afternoon.
Good afternoon and welcome to Frankfurt.
And welcome to Nigeria. Well, sentiment among Germany's consumers is more upbeat, but the German stock market seems not to be inspired by this. What are investors missing and why are they not more upbeat?
Well, you know, consumers in Germany obviously are slower than investors who already have anticipated the optimism and translated it into higher share prices. Let's not forget the German share index at the level that it is trading on right now is not very far away from the latest record high. And the reason behind this is pretty much the same that has pushed consumer confidence to a higher level. It is the hope that now, with more and more people here in Germany getting vaccinated, I, by the way, got my second vaccination shot yesterday, that now, you know, we can return to normal with our jobs, with our businesses, with our shopping. Many people in the country also expect their wages to increase, as you know, the short-time work schemes which were introduced during the corona pandemic are coming to an end. Those short-time work schemes, most of the time, came along with a reduction in pay. And of course, this is now going to end as the short-time work schemes are coming to an end. The pandemic is slowly coming to an end. And, you know, wages are expected to return to a higher, more normal level again.
And a court in the Netherlands has ordered Royal Dutch Shell to cut its carbon emissions by 45%. by 2030. It's a watershed decision. This stemmed from a 2018 lawsuit that argued that the oil giant was falling short of its obligations under the Paris Climate Agreement. What's the market's take on this?
Well, investors are taking this piece of news more relaxed than, you know, media commentators in Europe. The share price of Shell is under pressure this Thursday, but not very much. Of course, in terms of a short-term impact on the earnings of Shell, it's likely that we're not going to see a strong impact. On the contrary, you know, with the pickup of the economies worldwide, with a pickup of car traffic everywhere, this is likely going to be good for the demand of fossil fuels. Of course, the long-term outlook is less rosy and less shiny for Shell, with such a strong reduction of carbon emissions for Shell, and also with the obligation of Shell to, take care of the carbon emissions of the suppliers of Shell. That's what the court decided as well. This definitely will have, a long-term negative impact on the earnings of this oil company.
All right, and German chemicals maker Bayer says it's not going to increase the $2 billion put aside to deal with lawsuits against its Roundup products. That comes after U.S. courts rejected Bayer's proposal to offer compensation in exchange for limiting lawsuits. What's the market's reaction to this?
Well, Bayer's share price is significantly under pressure this Thursday. At the moment, around about 4%. Of course, while the fact that Bayer pays less now and reduces the amount of money it pays in the United States might be good short term for the earnings balance sheet of Bayer. But of course, for investors who had hoped that Bayer might be able to reduce the risk of these lawsuits in the United States, they are not happy. Bayer now considers that it might stop selling Roundup in the United States to private consumers completely, which means that Bayer is likely to only continue to sell it to professional users in the United States. The risk is simply too difficult to manage. You cannot predict how many more Americans who, used Roundup and might be falling ill with cancer might be inclined to sue the company too in the future.
Well, not a good picture there at all. Well, thank you so much, Conrad, for the updates. Enjoy the rest of your day. Well, moving over now to London, where Juliana is standing by, as usual, to bring us up to date with happenings in the UK. Hello, Juliana. Good afternoon.
Good afternoon, Innie.
Yeah, so latest snapshot of key economic indicators finds unemployment falling and business activity growing, but inflation and the new variant of COVID-19 remains a threat. How's the market reacting to this?
Well, the market here in London is very much in the red. At intraday, as you were just discussing in Frankfurt, we're looking towards some data that's going to be coming out of America any time now. With regards to these key indicators, this is The Guardian, which is a kind of left-leaning publication here in the UK. They've released their monthly report looking at the British economy. And I've got to say, they put on a pretty dour sentiment, really looking at what we're seeing as a short rise in COVID infections. This is due to the Indian variant, which is flocking up amongst hotspots here in the UK. But I've got to say, the Bank of England and other economists in the UK are pretty confident that Britain is finally on the road to recovery. UK unemployment rates have fallen to 4.8%. The number of job vacancies that are going out are climbing higher, which means that businesses are a lot more confident. They're starting to invest and expand, and they're looking for more people to flock to their workforce. Also as well, non-essential retail just opened on April the 12th, and already we are seeing that retail sales are surging. Across some high street stores, we're actually seeing footfall at pre-pandemic levels. So even though there is still a long way to go, we know the first quarter GDP fell by 1.5%. That's still much shorter than what economists had predicted back in February. And of course, we do know that now that outdoor hospitality is open, we are starting to see businesses flourish. This hasn't been reflected in the intraday market numbers because, like I said, inflation anxiety is still worrying some. We are waiting to see what that US unemployment data will provide shortly. But having a closer look at the numbers, the all-share is down 0.09%. The FTSE 100 is down by 0.14%. And the domestic market, the FTSE 250, is slightly up at 0.13%. In the currencies market, the British pound is also up on the US dollar by 0.11%, down on the euro by 0.03%, and up on the Japanese yen by 0.12%.
Well, I hope that threat of the new variant is not going to reduce or cut short the socials and freedom, and also the anticipation towards June 21st, the ease of restriction. What are you hearing about that?
Got to tell you, Innie, there's so many mixed messages that are coming from the government. Of course, we have that pretty bombshell testimony by Boris Johnson's former chief advisor, Dominic Cummings, yesterday, pretty much exposing what many of us knew about the government when it comes to all of their slippery U-turns. And it started again, and this is because of the Indian variant. A lot of government messages earlier in the week were suggesting that perhaps there could be more local lockdowns. That had been a very, very big fear. I believe, according to some data, positive coronavirus tests have shot up by more than 50% in some of these local areas. But then the government were very quick to backtrack, saying there would be no more local lockdowns. So we are waiting to hear an update from Prime Minister Boris Johnson about June the 21st. June the 21st has been dubbed as the new UK Independence Day, because that is supposed to be the time when there will be no restrictions. There'll be no restrictions on life. That's what they're saying. But there are some concerns. And I definitely think, because of the pretty scandalous revelations that were untold yesterday during Dominic Cummings' questioning, some people are saying, are the government going too fast? And should we wait to see if indeed the data that suggests that two vaccines do mean that you are going to be safe from the Indian variant? We all have to wait and see. But according to the government's official spokesperson, June the 21st is still very much on.
Yeah, well, we wish you guys the best. Well, yesterday we talked about electric cars. Today, Royal Mail has its first all-electric delivery office in Bristol, with a bigger plan to introduce a clean air zone later this year. How is this going to work?
Well, this is great for Bristol. This is great for Royal Mail. This is the first time that they're doing this. So the entire Bristol centre of Royal Mail delivery offices will be run by electric vehicles. I believe they've invested in electric charging units. Electric vehicles, obviously, we know that they're completely safe for the environment, but they also have much bigger space. And we know over the past 18 months also, Royal Mail parcel deliveries have completely surged. This is the first time, in fact, that parcel deliveries have outtaken letters when it comes to their revenues. So they're doing incredibly well. They need more space. So they're taking this opportunity to now install these electric vehicles, which is very much in line with the government's position of becoming green and lean. As you said, we discussed this yesterday. There are over 500,000 electric vehicles currently on UK roads, and the government are really keen for companies to take charge of this. So this is what Royal Mail are doing. I believe Bristol has been chosen because their local authority are starting to have a clean green emission zone. So yes, this is absolutely fantastic for the company and for the area.
Yeah, well, we wish Royal Mail the best in that also. Thank you so much, Juliana, and enjoy the rest of your day.
Thank you.
Well, moving on now, in Asia Pacific, there were mixed sentiments in trade today as investors reacted to the release of Chinese industrial profits data for April. Hong Kong's Hang Seng Index dipped about 0.2% as of its final hour of trading. Shares of Xiaomi in Hong Kong jumped nearly 4% in Thursday afternoon trade after the Chinese smartphone maker on Wednesday reported a nearly 55% surge in its first quarter revenue as compared with the same period a year earlier. Mainland Chinese stocks were higher on the day, with Shanghai Composite rising 0.43% to 3,608.85, while the Shenzhen Component gained 0.7% to 14,897.19. The Nikkei 225 in Japan slipped 0.33% to close at 28,549.01, while the Topix Index declined 0.5% to 1,911.02. Over in South Korea, the Kospi slipped fractionally to end trading at 3,165.51. Australia's S&P AX 200 closed fractionally higher at 7,094.90. MCSI Broadest Index of Asia Pacific shares outside Japan rose slightly. We'll take a break now. When we come back, more stories for you on Business Incorporated. Do stay with us. You're welcome back to Business Incorporated. Moving over now to the commodities market update. And we're discussing post-Ramadan effects on food prices in Nigeria, especially in the face of the recently released inflation prices. We saw food inflation reducing from 22.95% recorded in March 2021 to 22.72% in April. Mayowa Igi, research analyst with financial derivatives, joins us now to discuss this. Hello, Mayowa. Good afternoon.
Hello, good afternoon. Thank you for having me.
You're welcome. So there's a myth that is widely held that says that observers of Ramadan fast put on more weight in spite of the fasting, and the anecdotal evidence that support this belief is that the demand for food commodities spikes during this period. This year we've seen food inflation at a 4-year high. Do you believe this myth, and is there a correlation between the Ramadan and food inflation?
So I do not believe this myth, right? During the fasting period, there are people that eat a lot. They eat larger than their normal portions and they add weight. But these people do not represent, they're a minority and they do not represent the larger portion of fasters during the period, right? Now, talking about the correlation between Ramadan and food inflation, it's like every festive period, be it Christmas, Easter, Eid al-Fitr, we see a rise in food prices, and this impacts inflation during the period. And the Ramadan period is not any different. During Ramadan, we see a higher demand for food commodities, especially fruits and beverages, and this leads to an increase in food prices. Even we see food prices increasing to as high as 100% during the period. And this is a trend that we have seen over the years. This year wasn't any different. We saw prices of apples increase by 100%. We saw a bucket of beans that used to go for 2,600 naira before the fasting period go for 2,800 naira during the fasting period. So it's all in line with trends that we have seen over the years. And then we already had inflation in 2021. We already had inflation as a major problem in Nigeria, and this only added to it for the period. But you mentioned that the NBS numbers, we saw a drop in food inflation. It's not that food prices decreased over the period. It's just that there was a decrease in the rate of increase of inflation over the period.
Oh, okay. So the latest inflation data from the NBS show that the following commodities, eggs, fish, oils and fats and meats, saw a price surge and have remained stubbornly high since the lockdown. What do you expect food inflation to be in the next few months after the fasting?
So we know the major drivers of inflation over the period, over the past 1 year. We know what they are. We have growing insecurity, we have high logistics costs, we have high energy costs, and we have forest restrictions to food imports. These drivers have not been eliminated. They are still present, and they will continue to impact food prices in the coming months. And now there's a new situation on ground that we have come into planting season. We have entered into the planting season, and in previous years, the trend is during planting season, there's a drop in supply, and so we see food prices increase. And that is going to be a factor that's going to affect food prices in the coming months. And also, this planting season is a bit peculiar because we are not planting as much as we used to plant in previous years. We even have situations of people eating the plant and the seed. And so we do not expect that we'd have as much supply as we used to have in previous years. And this will impact the prices of commodities in the coming months. And then we will most likely see an increase in inflation. But then again, the increase in inflation may be limited by the drop in disposable income of Nigerian consumers.
So the land borders have been reopened, and yet food prices have not fallen. Why do you think, or does the closure or reopening of the border have any effect on food prices?
Well, if you go back to the border closure, the border was closed in August 2019, right? And that was the beginning. We can say it was the beginning of an increase in inflation in Nigeria. And this was because we didn't have enough we didn't have the production capacity to meet local demand. And then we had the COVID. We also, after that, we had the COVID pandemic. We had logistics issues all add to the issue on ground. And so that only added and increased inflation even higher. And these factors have not been dealt with. We still have them. They're still pressing now. So if we close the borders now, we will only stoke inflationary pressures further. And presently, we don't have the production capacity to meet local demand. And so it would impact inflation if we close the borders. While we understand the idea behind the border closure, which was good, it was to eliminate smuggling and boost local production, we still have a production capacity issue on ground. And if we add the ratification after, Nigeria closing the borders would be going against the tenets of the group, and then we're putting Nigeria in a bad light.
All right. Well, thank you so much, Mayo Aige, for sharing your thoughts with us this afternoon. Mayo Aige is a research analyst with Financial Derivatives Company. Well, moving on now, the government of Tanzania has waived import duty on machines and materials used for processing leather to encourage investments in the leather industry. It aims to promote local processing of leather products and is implementing a project to train over 419 livestock keepers in methods that help add value to the hides and skins of their livestock. The project for training livestock keepers has already started in 3 districts of Arusha region. And back here in Nigeria, the Nigerian Content Development Monitoring Board has committed a total of $332 million under its Commercial Ventures Partnership Program with a view to attracting project development in country valued at $3.7 billion. Some of the partnerships undertaken by the board include the 5,000 barrels per day Walter Smith Modular Refinery at Ibigwe in Imo State and Nedo Gas Processing Company in Kwale, Delta State, for the establishment of 18 million standard cubic feet per day. Other investments include the development of 5,000 metric tons LPG storage and loading terminal facility by Transol Gas Limited in Kuku, still in Delta State. And a Dash 8 Q400 simulator is being used for the first time in East Africa to help train pilots. It's a move its main user, Kenya's first low-cost airline, Jambojet, hopes will help it cut costs incurred by flying pilots abroad for training. Here's the report.
Chief Pilot Michael Kwinga of Kenyan low-cost airline Jambojet climbs into a newly operational Flight Safety International Dash 8 400 simulator. The airline's officials say it's the third of its kind in Africa, and it's been set up in Nairobi, where Jambojet's pilots, crew members and other critical teams will train. The simulator is in operation now based on a 2019 agreement between FSI Kenya Airways and Jambojet. Kenya Airways is the country's national carrier, while Jambojet is its no-frills subsidiary. FSI is among the world's leading producers of flight simulators. After the required checks and under the watchful eye of Flight Inspector Joseph Strong, Kwinga takes off.
You're able to put different scenarios, you're able to change the weather, you're able to put malfunctions if need be, and a couple of other things. So you're able to control it, and if need be, you're able to freeze the simulation, as it were. Okay.
The simulator is also able to replicate sensations like those produced when accelerating for takeoff or during turbulence. Jambojet's new fleet of 5 D'Avila Canada DHC-8 aircraft, known as Dash 8 around the world, are a critical part of the regional airline strategy to recover from the job and pay cuts it had to make as a result of the pandemic.
Well, that's it on the program today. Thank you so much for watching. I'm Ini John Mekwa.